Hey guys, how you doing today? Welcome to Millionaire Mafia. Going to check out a new flip of ours that we're trying to lock it up. We've actually locked up two deals, closed two deals, I should say, in the last week. So it's been a good month for the company, and we just have been talking to another seller in the Crestview area, which has been a real hot market, and so we're gonna go try and lock this one up. That should be a pretty good flip, which we're going to hold internally. We've already got the funding lined up and everything like that. So we're going to go ahead and check it out today. I'll do a quick little video of that just to kind of show you what we got going on. But what I wanted to talk to you about before I get there, I'll be there about 10 minutes, is something called income shifting. What it essentially is shifting your income that you make from your own personal business over to somebody else in order to lower not only your taxes but potentially their taxes as well, and essentially keep it in the family. Now it doesn't have to be family blood, but the family or the crew or the business, right? So here's an example of how I did it. We make money, right, just throughout the year. It can be earned income or passive income, whatever, it doesn't really matter. And then what we do is through our business, we put our kids on our payroll. So there's a little bit of cost in payroll. It's probably about $600 up to $800 a year for the cost. This filing with the state and all that kind of stuff for the payroll stuff. But what we do is we pay them a very small amount. They're 13 and under, so they do good work. But we pay them anywhere from about $5,000 up to about $7,000 a piece, which is actually, from talking to my CPA, potentially a little bit low, based off of the new $15 minimum wage and all this other kind of stuff that's happening. What they do is actually worth, or would cost us, a decent amount. So, but for now it's reasonable. For 2021, it's reasonable. We pay them, and it's below the minimum federal amount, meaning they don't have to pay any taxes on it. It ends up being about $25,000 when you factor in all four of the kids. So about $25,000 that I get to write off dollar for dollar. So like $25,000, boom, right there. And that money went to my kids, okay? And then they don't have to pay taxes on it because it's below the minimum amount. And I don't have to pay FICA, they don't have to pay FICA, Social Security, Medicaid, Medicare, all those taxes, which is awesome. And then what we do with that money is we opened up 4 new whole life insurance policies for the kids, and that will be there forever and ever and ever. And they'll have over $1 million death benefit, plus they'll have over $100,000 worth of cash saved up in this account. It'll actually be closer to about 120, and then it'll grow and grow and grow, and they can use it for, they want to buy a vehicle, they want to start a business, they want to go to college, whatever it is. What I think the coolest part of all of that is, it's cool enough that I get to write all those expenses off. My kids don't have to pay any taxes on them. And then we get to fund those whole life policies with what would normally be post-tax or after-tax dollars, right? Because there's no tax benefit for these whole life policies when you fund them. But what's really cool is that not only do they get to fund it with tax-free dollars, right, that will grow forever and ever and ever, so essentially like a Roth, except for they can take it out and use it whenever they want to. There's no penalties. What I think is the most powerful part is that I actually open these policies on them, and I control the policies. So I can use these policies, the cash value that's stored in these policies, to fund our real estate deals. So I'm not paying taxes on $25,000 that I'm giving them. Paying them, I should say. They aren't paying any taxes. They're funding a policy they'll stay with them for their entire life and be able to pass on over $1 million to their heirs. Also, they can use those funds to fund other deals, right? The cash value to fund deals. And I get to control and use those policies to make money for our business, essentially tax-free during that time, up to when I give them the policies and sign them over to their name, which is pretty cool. A lot of cool things. In fact, we are using the funds from their policies that we opened that has a cash value, plus the one that we opened up 3 years ago, and we are actually buying into a 61 unit RV park that's going to be closing at the end of this month. We'll be doing a development, building it out to over 100 units, and it's located right here in Pensacola. So really cool, partnering with a couple buddies of mine that I've known for a long time, and really excited to do that and actually, you know, see the power of these policies and how they work, and then bring my kids along the way, so they're going to see the returns that their money is getting, and then kind of see how that works, and they're going to be involved in the deal and things like that. So that's one example of income shifting. There's a couple other ways you can do it. Talk to your tax professional, attorneys and stuff like that, to make sure you're doing it the right way and staying compliant. You don't want to do anything illegal that would force a taxable event. It's totally legit and totally legal. It's just a different way. Most people don't do it with their insurance policies. They typically do it with their business. Let's say they've got a S corp and they bring on their employees to include themselves and their wife, or excuse me, their kids to include their wife and themselves. But you can bring your kids, you know, up commensurate with the amount of work that they're doing in the business and pay them below the minimum amount, and they won't have to pay any taxes on it. So they can either keep that money or use it to fund other things. They could also fund, if you wanted to, a Roth IRA. So they could take that $6,000 worth of that tax-free income that they're making and then fund it into a Roth IRA that is then never going to be taxed. The downside on that is that it can definitely grow, and over the years they can build it and put it into a self-directed and invest in real estate and, you know, money, you know, hard money lending and things like that. The only downside is that if they were to need to or want to take all that money out, they would have to pay, you know, the 10% penalty plus tax. That all that money would become the gains would be a taxable event. The other downside is that there's no death benefit. There's no disability benefit or anything in there. So I really think a whole life policy is a lot more powerful if you know how to use it. Got a lot of naysayers out there that talk crap about the whole life stuff. I think many of them are complete garbage, but if you know how to do it right and you can qualify, right, you have to make sure that you qualify. It's still life insurance. So if you're fat, if you're out of shape, if you're old, if you're sickly or otherwise uninsurable, it doesn't work. So the people that typically are talking trash about these policies typically wouldn't qualify, or their premiums would be so high, or they're needing to get their money out and get the returns and see things soon. I'm playing the long-term game. I'm playing the 200-year vision game, right? Like we talked about. Think like the Rockefellers do. My money is going away to be used by my heirs, my great-great-great-grandkids 200 years down the road from now, right? Doesn't mean, but the great thing is I get to still use it now. The amazing benefit is going to be down the road for my heirs, but it's a really cool benefit now, and I can grow my money. So I'm going to do a video pretty quick here. I'm actually going to have Tom Lonnie, my insurance agent, and we're going to talk about my specific policy and then some other, you know, do's and don'ts and things to consider, both good and bad. Open book, full disclosure. You know, I'm not trying to convince anybody to do it one way or the other, but I want to make sure that your decision is at least informed. I'm getting ready to pull up to our property. I'll put this property in a different video, and we'll see what it looks like. All right. Really appreciate you guys being here. Let me know if you got any questions on this income shifting stuff. I'd be happy to talk to you. I am not a tax advisor, professional, legal advisor, so consult the appropriate parties if you have questions on those things. But I'd be happy to talk about my experience and what I've done and what I've seen and things like that. So appreciate you guys being here. Go ahead and hit that like, hit that subscribe button so that I can keep you up to date on the videos as soon as they pop. Until next time, here's to your wealth.